Hi, this is Pat Moorhead with Moor Insights Strategy, and we are here for another incredible episode of the 6-5 podcast. It is Friday again. Daniel, we are getting into the groove of Friday morningness, and it feels pretty awesome. Feel pretty good here. You know, it's starting to get warmer out. Many restaurants, and gosh, I even saw an open air venue, a band playing 2 nights ago in downtown Austin. Feels really good. Daniel, how are you?
Age us a little bit that we break into the show, big week, tech, all this stuff happened, but we talk about the weather. I don't know, but I am turning 40 next month. I think that's the new thing. I meet people for coffee, although we do it over Zoom now, and then we're just going to talk about weather because that's like an aging.
Well, it really gets bad. I mean, we need to be shut down if we start talking about our health. So, no COVID speak, no got my jab, right?
Yeah.
I'm good.
It's an interesting one nonetheless. Actually, having said that, though, it makes me think of those commercials about the insurance, like not becoming your parents. I don't know which one that is, but, we all do eventually become our parents. Anyway, but dude, what a week, huh?
I know. Yeah. Let's dive in. We have an earnings Palooza episode, and I think we're on the third or fourth quarter of doing this. So it's all earnings today. And by the way, for those of you who are new to the 6-5 podcast, we cover 6 topics, 5 minutes each, with some time on the front and some time on the back. So, it's about 30, 40 minutes. And we try to really hit the analysis because we know that you can get the news pretty much everywhere. You can Google it, you can go to Google News and find that. What we're trying to do is find the deeper meaning and the significance of it. And as tech analysts, I like to say I watch earnings because tech companies can lie the least on it. Because, if you say something during earnings call that doesn't end up to be true, you can get sued, you can get put in jail. And that's why I like to tune in, because it's pretty exciting. So Daniel,
disclaimer here, huh?
Yeah. The disclaimer is, hey, this podcast is for information and entertainment purposes. Are you not entertained? Don't take this as investment advice because we are not qualified to provide that. So with that, Daniel, let's jump in.
We are super smart, though. I mean,
well, I think we like to think of ourselves as that, but with that, let's dive right into AMD. So I'll head this one off. So AMD has pretty much been crushing it for the past 2 years, and they crushed the first quarter. Daniel, not triple-digit earnings growth, just a mere 93%, 100% growth in gross margin, a measly 275% gross increase in op inc and net income. Oh, they're killing it, right? The computing group, which is the client computing group, which is essentially Ryzen and Radeon, up 46%. ASPs were up. And by the way, in this environment, and this is what shocked me so much about Intel's earnings, but their ASPs were actually down. Processor and graphics ASPs were up for AMD. EESG, which is a conglomeration of server, semi-custom, which means game consoles, was up 286%. Boy, how I wish they would break out their server numbers epic. They really need to, because every time I see it lumped together, even though they're saying, hey, double-digit growth, I'm thinking, okay, what's the base? Shouldn't it be triple-digit growth like it was two or three quarters ago? And the market, net, the market rewarded AMD initially, and then, like a lot of tech stonks that we've seen, kind of trailed off.
Yeah, our friend Kramer actually came out a bit outspoken today about his frustration about these blawed earnings and sort of the lack of movement. We have entered sort of like a parallel universe now where we are on a full, buy the meme, sell the news, buy the rumor, sell the news. People are getting all pumped up, but it's like becoming it's a known entity that companies are going to blow out earnings. And so you used to kind of think, oh, just wait till earnings. That's when we're going to see a big rise because they're going to have a great quarter and everybody's going to buy. It's going to push the stock up. But what's happening now is the stock runs up right until earnings. These companies come out with these amazing results, 90+% growth, Pat. It's insane. I mean, although I would say the sequential growth quarter over quarter was much smaller. So people aren't realizing it. AMD is on a sustained path. So they've been blowing out last year, but they're slowly growing on a quarterly basis. But what else is really happening is nobody's surprised anymore. Were you surprised yesterday? I mean, we'll talk about Amazon later. Were you surprised when they destroyed the EPS number by like 50%? I wasn't surprised. I was expecting it. In fact, I almost feel like I can predict these things accurately now because all you got to say is it's going to be good, and you're going to be right. And so that's what Cramer was saying, though. He's frustrated that earnings, we move on tax. Someone makes a comment about a possible increase in our taxes. The stock market goes down 500 points. Somebody mentions that we might reopen or air travel is up. The market goes up 400 points. A company actually does a terrific job on a quarterly basis, delivering on its promise. And people are like, not interested, going to sell it. AMD deserves all the credit. Lisa Su has been on a tear. Thrilled that she's going to be back at our event this year. Can't wait to talk more about that publicly soon. But listen, AMD is doing great. The market in semiconductors is very strong. We've seen CPUs up 30% plus. Let's just say, ring the bell, AMD. Good job.
Yeah. Final thing I'll say is I do believe that AMD took revenue share in client computing and server. I believe that on a unit basis, we'll probably see Intel up in client, but down in server. So a good job, AMD. Let's move on to our second tech stock, and that is Google. Two big businesses there. Well, actually, one really gigantic business, which are ads, and a tiny business, but getting bigger cloud business.
Yeah, absolutely, Pat. And I'll share the limelight with you here. I had the chance to go on and talk to Emily Chang on Bloomberg about this one, and after digesting it, look, I kind of see the ad spend is back. I mean, Facebook later in the week proved this, but across the board, companies that are in the ad space are performing very, very well. The earnings were it was $11 above expectation, 26 versus 15. I mean,
11.
Over 55 billion in revenue. YouTube was up. Traffic acquisition costs were pretty steady. Revenue rose 34% year over year. But this is a kind of a reopening story. And again, everyone gets excited about those. But when the pandemic took place, Google actually took a fairly significant hit to its ad revenue because a lot of people that advertise on places like Facebook and Google are smaller businesses that are spending money to drive traffic to their company sites. Well, as we're starting to see reopening, we're starting to see more momentum in industries that have basically been completely shut down. I traveled this week. I was in Texas. In Dallas, not Austin. Austin was going to be my home. But my point was, the hotel was packed. The airplane was packed. The airport was packed. We're starting to see the world look and feel like the world, like the one that we knew pre-2020. We're not entirely back. There's still issues. India is a big issue. There's still issues going on here in the States. We have not gotten everybody vaccinated. We haven't yet figured out exactly what how robust our immunity is. But we're starting to see things more normal, and that means more spend in Google. So that's what's going on the advertising space, Pat. I'll make one comment about cloud, and then I'll let you chime in because I know you work closely with the team over there at Google Cloud. Revenue is up. It's up substantially, up over $1 billion from the same period last year. But the losses are still mounting, over 900 million in losses, but they're narrowing. And that's basically when it comes to Google Cloud what I'm looking for. I believe they're not interested in being number 3. They're interested in competing side by side with Amazon and Azure. They're going to spend what it takes. They will continue to lose. And when you're generating $26.29 a share in earnings, even after losing $1 billion on your cloud business, you can continue to keep investing.
Yeah, and that's what I'd like to focus on, which is their cloud business, which, for forever, we were wondering, hey, how big is this, cloud business? It was in the other bets before, and I was really happy to see them break it out. And I think the timing was good because if I look at how they did. I mean, they were up 34% in cloud, up 1.3 billion or 1.27 billion. In comparison to AWS, which is sometimes unfair, they were up 3.2 billion. But still, even putting Google Cloud and AWS in the same statement is I think impressive. Now, I'm going to come out and state the obvious, which is that Google is primarily SaaS with some PaaS and a little bit of IaaS, where AWS is tilted more to IaaS. But AWS does count their PaaS and SaaS as well as cloud revenue. So I don't know what cloud revenue is. My definition is IaaS plus PaaS plus SaaS. Loss narrowed. Loss can't be there forever, but you know what? When you're cranking out $15 a share, is that what you said?
26.
Sorry?
26.
$26 a share, you can afford investments and go forward losses. Now, the loss did narrow substantially, which was nice to see.
Yeah, I think just to wrap up on this, because the back and forth, we just have too much to cover, Pat. But everybody kind of wonders that question. That's what we need to watch: is how long will Google Alphabet sustain losses in its cloud business in order to catch up and grow? And I actually think it'll be a while. I could see at least 4 to 8 more quarters, which is significant of taking losses, because I think they'll invest in people and they'll invest in data centers and they're going to invest in winning business at every opportunity. Because like I said, I just don't see Google being interested or Alphabet being interested in being number 3 in anything, which, by the way, I love. We always say this on the show: spurring innovation, spurring competition, good stuff.
Well, and the market typically comes in threes, right? And I know a lot of that's based on how you characterize a business, but good markets have 3 very, very large players, and that's how markets typically end up. So, hey, Daniel, let's dive into cloud and operating system giant Microsoft. They had a blowout quarter as well. And I'm looking for my notes really quickly. Where are you?
I'll start you out, Pat.
Yeah,
seeking
I mean,
you ready?
I'm good. Yeah. So overall revenue, not as impressive as, let's say, an AMD, but very impressive when you look at the scale and the profitability of 19%. Net income was up 44%. That's GAAP, not non-GAAP. But to me, key messages are business was growing where it needed to grow. I mean, where you would expect it to grow. And the businesses that weren't doing very well were ones you wouldn't expect them to do very well. So when you look at SaaS, when you look at cloud, so Azure, Dynamics 365, Xbox, right? People are home playing games. It was up 34%. But the number one key here is Azure, up 50% on a base that I have no idea what it is in terms of dollars yet. And things that, weren't, I mean, server was up 3%, right? That's on-prem, Windows Server, something you wouldn't expect to be up, because as we've seen, a lot of the on-prem businesses aren't growing substantially. So the one final thing I'll point out is that Surface was only up, was up 12%, which was good. But when you've got Apple coming in up 70% in MacBooks and the market's going up 50%, it's less impressive. We don't now. The number is 50% on a unit basis, so we don't know revenue. And Surface does have some lower priced options, but still, I mean, I'd like to see Surface in the 30-40% growth rates in the future.
Yeah, it's interesting. The ASPs are up on a lot of the chips for client. We're seeing growth, huge growth from AMD, but Intel had a record quarter there as well, which, Surface has variants of both. I think that's been a little bit of a puzzling spot for me in the overall earnings for Microsoft the past few quarters, is that as strong as PC has been, that Surface hasn't been a little stronger. But let's look at the top. I like your comment about Azure. We don't know exactly what what it is, but we know that the market is looking at that 50% growth and continuing to see it 50 plus. Just a few quarters ago, it was running up it was running hot in the 80s and 70s, and then it quickly fell in the beginning part of the pandemic down into the 40s. And people were wondering if they were going to follow the trajectory of the AWS number, which had kind of a law of large numbers shrinkage in growth quarter over quarter. We're now seeing it kind of stabilizing in the high 20s, low 30s over at AWS. Well, it looks like Azure for now is stabilizing in that 40s and 50s. But again, as you said, we're not really getting a clear indicator on that broken out number. But we do know that the intelligent cloud business is very large. But Pat, here's the thing. For 2 quarters in a row, Microsoft has, I believe it's, I'm just counting it down, I think it's 10 segments that they break their business into. Not one of them retracted this quarter. 10 segments, all of them grew, okay? The smallest growth was in Office consumer products at about 5%, and the largest was Azure. Xbox was up 34%. The company really is delivering on its promise across all of its business units, and it's showing that there's still room to run and room to grow. And that's probably one of the most impressive things, Pat. This was the largest year-on-year revenue growth quarter for Microsoft since 2018. So all the successful quarters that the company's had between 2018 and now, this has been the best. And so it's just another bellwether moment for the tech industry that tech is on fire. And Microsoft is highly diversified. But as I said, this wasn't like growth, even like the Google thing where we talked, or Alphabet, where we talked about ads sort of offsetting. They're growing in every group. They're profitable. Their margins are up. They're operating very successfully. I mean, Dynamics 365 is growing that's their cloud ERP CRM. It's growing in the 40s percentage. So, and you got to compare that with like a Salesforce that's growing around, on their CRM sales in the teens, and on their overall product mix in the 20s. So I've made suggestions before that Microsoft is catching. Well, based on just those percentages, it may be a long route before it would catch, but they're growing at a faster pace than the leader. And so
that's right.
Similar to here is what's happening with Azure versus AWS. And there are some pundits that say Azure is making some material gains. Now, again, AWS is over $13 billion. We'll talk more about that later. But Azure is growing at a faster rate continuously quarter over quarter, which does mean, kind of like you mentioned with AMD making market share gains on certain big parts of Intel. Well, Azure is doing something similar with certain parts of AWS, but overall really solid for Microsoft.
Good breakdown, Daniel. Let's dive into Apple, and maybe I can kick that one off. So I love your provocative headline there. Apple destroys and stimulus purchasing, and I have to say yes. I mean, if I look at all the companies who are taking advantage of the pandemic, I would put Apple right up there. I mean, it's ironic when the pandemic started and the notion that people are going to stop buying smartphones, and it did impact it in the first half of it, and then people revved it up, and Apple came out with 5G, and here we are today. So I would say that Apple is winning the pandemic race. The irony, though, is on a percentage basis, and even on on a percentage basis, that the biggest winners here were the Mac and iPad, right? Up 79% and 70% respectively, which just shows you how much demand there is for endpoint products, given that people have to work, govern, and school from home still. So if I'm giving my awards, if I'm Tim Cook, I'm going to give my awards to the supply chain team here at Apple. Tim Cook and I were actually at Compaq at the same time. I was a lowly product manager, global product manager. He was running supply chain for Compaq, and he was good at Compaq, and he's great at supply chain at Apple, and I think has really lifted them up. And you combine the roadmap of Steve Jobs and the innovation, plus the supply chain expertise of Tim Cook. That's a real incredible combination. Interestingly enough, is Cook did talk about some potential shortages out there of supply components. And, if it comes up with Apple, it's got to be pretty bad. And let me tell you why. Unlike most companies, Apple, they invest a lot in CapEx, right? And typically we think of CapEx as PPE, property, something else that starts with a P, and equipment. You think of Azure building data centers, right? What Apple does is they buy line capacity at TSMC. They buy line capacity at the Display Corp. They buy line capacity at the Toshiba memory offshoot, and they lock it in with CapEx. It's great use of their cash, which, by the way, is up to $204 billion after earnings. So hats off to Apple on this. There was also some good signs for M1. Their margins were up. And here's my suspicion, Daniel. In a supply-constrained environment, for gross margins to go up, this must mean that they had some cost decreases. And the only thing that I could ever think of that it could have a cost decrease is the M1. And let's just say my back of the envelope says that the BOM cost of what Intel used to sell them is around $250. And I would say that the BOM cost of the M1 is between $50 and $75. They can take that right to gross profit. And yes, there's R&D, but that's below the line, doesn't impact gross margin. But that is my sneaking suspicion that they are making boatloads of margin dollars on those M1 based devices.
Yeah, it was a really solid quarter. By the way, good back of the napkin math. That's your specialty, Pat. I mean, look, every part of Apple's business is performing. I mean, no one would have expected Mac and iPad revenue to be up 70+% in both cases. I think it is an availability thing, Pat. I mean, it was also a stimulus thing. People got money, spent money. People that wanted an iPad went and got an iPad. I mean, this was a momentary opportunity to take advantage of the situation. And by the way, Tim Cook is also extremely good at that. Couple other things I think are worth noting around Apple, the stories that aren't being told. One, we didn't even talk about it, but the company's lived and died by the iPhone for a long time. So when iPhone outperforms and overperforms, the company does well, and it did. It overperformed, 65% growth on iPhone. I mean, you would think, how does iPhone even grow at this point? I mean, it seems like everybody that would have one already has one or three or five. But this is also part of the 5G wave, and we'll talk more about that in a little bit. Also, Pat, and this is probably the last thing, they're executing on services. This was something that I was more skeptical of. Could the company become a stronghold for services? They're a $60 billion run rate on services now, Pat. I mean, they're a juggernaut. They're in TV and in movies, original content. I mean, some of their shows are getting a lot of momentum now. Podcast offering, credit cards. Now you got key tags. I mean, there's all kinds of services that are tying to every corner of what Apple does. And by the way, this was a margin enhancement that the company also had to make to drive up its margin. So you talked about back of the napkin, margins up, risen by M1, which is center of their ecosystem. I will also say when you have a services business generating over $16 billion a quarter in revenue, you are seeing extraordinary margin gains when your old business, when the legacy business was pure hardware. So that was another big transition that the company is succeeding at that you can only be impressed by.
Yeah, speaking of services, Apple could be in hot water here. So the breaking news this morning was that European regulators that says Apple has a monopoly in the distribution of music streaming apps to owners of Apple devices. And Daniel, you and I know from covering Qualcomm versus the world and Qualcomm versus Apple, when the EU comes out and says that you have a monopoly, the next step is a fine, and you have to change your business practices. So I'm wondering, could this be like it was to Microsoft in the 90s, the regulators who will pull Apple down, just like they did Microsoft, right? When it was dragged through all of this, had to change its licensing for its Windows operating system, which at the time was its only product out there.
Look, the company needs to be regulated. You and I have been first and foremost. I mean, when it decided that it wanted to put the hammer down on Qualcomm to get a better deal, it took every resource at its disposal. Well, I mean, we're coming full circle. You've got Match, parent company to Tinder, going after Apple. We've got the Epic Games. I mean, the EU is like a police department. I mean, they're going to give you a speeding ticket, and you're going to move on. I mean, whether it's been Google, Amazon, Apple, everybody in Europe, Qualcomm, they all get a fine, they pay it, they move on. It's a fundraising activity. What's going to be most interesting to watch is, will the United States at some point determine that Apple is acting in some type of monopoly? And by the way, worth noting on that topic too, Pat, is the dominance of Apple devices in the US is substantially higher. So yes, it might be an issue in Europe and in other parts of the world, but the prevalence of people on Apple and on iOS in the US, much higher, meaning a much bigger opportunity for the company to use its dominant market share to limit competition, which is what the regulators will need to look at.
Yeah, I'm really going to be interested to see what Olivier spins up on this in particular. So let's move on to Qualcomm, another chip stonk that crushed it. They were up after hours nearly 5.5% when they issued their second quarter earnings, and it was the last earnings for CEO Steve Mollenkopf, who handed the torch to Cristiano Amon.
Yeah, absolutely. We had the opportunity to spend a little time with Steve ahead of that earnings call. It's always been an honor to get insights, having Steve and Cristiano talking to us. I mean, look, the company's doing really, really well. It's coming off a tumultuous series of years. Speaking of Apple, with its litigation, FTC, regulation around the world, had its NXP deal killed by regulators and slow-moving decision makers. The company has not had the easiest set of years, but what it has had, and what I said for quarter after quarter, was the tailwind of 5G is going to be important to the longevity and the momentum, and Qualcomm's there. And I admire Steve and what he helped the company get through, but I'm also excited to see new leadership. Cristiano is a passionate, inspirational personality that I think is going to be really technology focused, hopefully getting away from some of that legal and regulatory. It won't go away, but just being a little bit more out there talking about the tech. I mean, in terms of the earnings themselves, $1.90 versus $1.67. The earnings, the revenue came in at almost just under $8 billion, about $400 million. It's funny when it says 7.93 versus 7.62, and you go, that's not that big of a beat. Yeah, you're right. It was only $300 million. I love how with multi-trillion-dollar stimuluses, Pat, now we know stimuli, we no longer look at hundreds of millions as a big number. It's a really big beat. Here's the thing, Pat, that I would really want people who are listening to this podcast to be thinking about with Qualcomm is 5G handsets is a core part of the business, and the momentum behind that 5G business is important. Year over year, we saw a 53% growth in handset business. That is the 5G wave. You're seeing it happening. They haven't revised their total handset number up from the 450 to 550 million 5G handsets yet, but that number and that revision maybe could be coming, Pat. I think you might have even asked a question about that. But here's the other part of what I thought was very interesting about Qualcomm. $2 billion plus, over 1/3 of their revenue is not tied to handsets on their technologies business. You had their RF front end business. They've, against Skyworks and Qorvo and Broadcom, emerged a leader, nearing $1 billion a quarter, up almost 40%. Their automotive business hitting nearly $250 million, up 40% as well. And then finally, 71% growth, Pat, in their IoT business, which is now a $1 billion business for the company. So we think of handsets, we think of 5G, we might even think about licensing and intellectual property when we think about Qualcomm. What we don't think about are all these adjacencies that are now generating 1/3 of the technology's revenue and growing about as fast as the handset business, meaning that within a few quarters, that could be easily a $3 billion business, giving a lot of runway and a lot of trajectory for growth at Qualcomm.
Wow. There's about a molecule of oxygen left in there. It was a it's great analysis. And I want to echo, it was a real honor to, you and I both talked to Steve and Cristiano about the earnings. And I thought that those two made an incredible pairing. I'm even more excited to see kind of what happens next with Cristiano at the helm. And I really think Cristiano's legacy needs to be, what did Qualcomm do outside of wireless, right? And it's hard for me to separate RF handset and digital modems. Those are part of smartphones, right? And you need a analog and a digital portion to make the magic happen. So I'm really interested to see when it comes to AI, when it comes to IoT and automotive, where the company can go. I think we're going to see a rate of acceleration at Qualcomm in terms of what happens and how it happens. And I'm super excited to see where it goes, because the engineers who work at Qualcomm are brilliant. The company is best at solving the hardest problems. And wireless, particularly when, I remember the naysayers saying, oh, 5G, yeah, it's easy to have a separate digital and a separate analog function without working. And Qualcomm's like, I think this is going to be really difficult here. And that's part of the magic behind their incredible analog business today, which, like you said, is the biggest handset RF front-end business in the industry, bigger than Skyworks, bigger than Qorvo, and bigger than Broadcom. So strap your helmets on, folks. Cristiano is in town, new sheriff in town. Let's see what happens.
Absolutely, Pat. 54% year over year and 116% earnings growth. I didn't say that earlier, just reminding everyone. Pretty darn impressive. But Kramer's mad. Stock price should be up more.
Yeah, it should be. And speaking of stock that should be up more, let's talk about Amazon. Two things I want to talk about here. We want to talk about earnings. We also want to talk about them getting ranked the top place where Americans want to work by LinkedIn. Maybe I hit the where to work and you hit the earnings, Daniel.
All right.
Why don't you kick this off?
Sure thing, Pat. So look, the numbers are just astounding. Okay, we're talking 108 billion, not for the year, for the quarter. You're talking about 1579 in earnings versus just about 9 expected. This is what I was talking about when we were at the top of the show, Pat. It's gotten to the point now where we're not only beating, we're destroying, and this has happened across the board. We saw it with AMD, we saw it with Apple, we saw it with Amazon, and then everywhere else where it wasn't destroyed, it was just a really, really significant beat. Amazon really is doing everything right. I've got an op-ed that should be out in the next couple of days, and I'm really looking at this, because the thing about when you're growing this fast and you've gotten this big, we talk a lot about law of large numbers here on this show, is can it continue, right? We had 44% growth. So they did 108 billion, 104 expected. But a year ago, they only did like 60 something in this quarter. That's the delta. And by the way, that's a big number too, is where does that growth stop? And so what I'm really focusing on is where does invention and innovation and then support for doing the right things come into place. And you'll talk a little more about the doing the right things when I turn it over to you. But let's just talk about invention, because people kind of go, well, how can the company grow anymore? Well, the company can grow more because it continues to innovate and disrupt in every category that it decides to participate. So you've got the 50-something% growth in AWS. It's by the way, $54 billion run rate from their cloud business. And their cloud business is small in terms of its revenue. It's been large in terms of its operating income, and it's participated to the company's ability to grow and invest. But that investment seems to happen anywhere and everywhere. They're growing in Europe. They're growing worldwide. They're growing significantly domestically. They're expediting shipping. 2009 was the first time they did same-day shipping. Well, now they're doing, same day on orders after 5 p.m. And they're able to offer that included for Prime members. You've got Scout. They've got drones driving around the streets delivering stuff now. I mean, they're innovating and inventing consistently. And then let's look at other things. Amazon Pharmacy. So now they're going to offer 80% discount on generic drugs delivered to your door in 2 days for no extra charge. They're going to compete with the CVS's. They're going to compete with the Walgreens, and they're going to do it effectively. You got Amazon Wardrobe. You want a Stitch Fix? No, you don't need Stitch Fix. You got Amazon. And then, you start to add and diversify. By the way, devices, some of the most innovative devices through Ring and through Echo, they're going in people's homes. They're getting better. They're building chips that it actually drive higher levels of inference. So people are now talking to devices in their home. Everybody's got a smart doorbell. Well, not everybody. It feels like everybody. And then, and I'll just leave it on, one last thing. Studios. This is everyone talks about Apple TV and everyone talks about Netflix. Well, Amazon Studios had 10 Academy Award nominations and 12 Golden Globe nominations this year. I mean, they legitimately are innovating and inventing, diversifying, and adding into every category. And Pat, by the way, I could go on and talk about a whole slew of things they're doing on ESG and diversity and inclusion, but I'm going to leave that for you because my darn molecule leaving behaviors have gotten so poor lately.
Oh, we're all good. I sucked the oxygen out of the room on some topics, and you thanked me back for that. So, one big award that I think was a shocker to those people who don't truly understand Amazon was that for the U.S., LinkedIn was voted the #1 company where Americans want to work. Now, that is not a typo. Out of LinkedIn's 740 million members, the U.S. folks said it was #1. And the reason why I say that that's incredible, and you have to understand Amazon, is Amazon gets more heat than any other company I'm aware of for what it does, right? There's memes on taxes, there's memes on jobs, there's memes on salaries and benefits. Well, Amazon already is paying its workers a minimum wage of $15, which Bernie Sanders says should be the minimum wage. They're providing healthcare benefits as well, and in a recent news story, Amazon employees at a specific warehouse voted down by 70 to 30% the desire to unionize. So, and I think at some point, like, the meme starts to have to go back to Amazon is a very successful company. Let's not punish them or think, well, they're bad, because they make a lot of money, and they do pay taxes and make investments based upon what is essentially thrust upon them, and they do these, and they play by the rules. But I think the meme needs to start changing to Amazon helps a lot of people. They employed 450,000 more people than before the pandemic. Think about that. 450,000 people. They're way ahead of the Paris Accord by 10 years. And it's not just them. They're pulling other companies into it. I think the number's at 100 right now, with some of the leaders in different areas like Procter and Gamble.
And Microsoft.
Yeah. So they're leading in so many areas, and I think it's just time to everybody take a deep breath, and look at their record. Yes, their founder is the richest man on the planet. That does not make them bad. Amazon employees, some of them are getting very rich. That doesn't make them bad or a bad company. Hey, call out bad behavior where it's there, like denying P-Gate, right? That was not handled correctly. And I'll call out Amazon on stuff that I don't agree with myself. But anyways, I don't get passionate about this at all. But their own employees, LinkedIn, best place to work. Arrest my case.
Yeah, absolutely, Pat. You hit a lot of it on the head, and I know we've got to wrap this show up in just a few moments. I could go on and on. I'll put my op-ed in the link as soon as I have it. You'll see it. I've talked a lot about this. We've talked a lot about not punishing a company for being successful, but like you said, great point, Pat. Punish them for the behavior. If they're doing certain things bad, whether you're a $100 billion quarter company or a $100,000 quarter company, you should be called out for those types of things. Quick note, just want to give a quick shout out. Congratulations to our friends at Honeywell. This morning, an announcement hit the wire. The company, after many, many years of being traded on the New York Stock Exchange, is actually shifting and pivoting its ticker over to the NASDAQ. This goes and coincides, Pat, with something you and I have talked a lot about over the years. It's changing its DNA to be more of a tech company, and many of the world's most important tech and innovation companies are traded on the NASDAQ. This will not change its reputation instantaneously overnight, but what I would call it is a strong sign of intent. So congratulations to Darius, Adamczyk, and Honeywell. Just a quick thing that happened as we were putting this podcast together. And at this point, I'm going to quiet my mouth and allow you to shut this show down.
Yeah, great ending, Daniel. Honeywell, leaders in quantum computing and the industrial IoT. They've got the OT and the IT. Imagine that, what can happen. So I'd like to thank all of our viewers for hanging in there with us on our earnings Palooza. We're going to do this about every quarter and talk about stonks, but also in a future episode, we're going to talk about something Daniel and I have been working on that we're very excited about. We had a very successful 6.5 Summit last year with nearly 35 speakers. It's a thought leadership summit. And guess what? We're going to have one this year too. So we're not going to talk about that, but we're super excited and we are sold out, which I'm super pumped about. So with that, if you like what you heard and you're listening to this on YouTube, press the subscribe button. Let us know what you think on Twitter and LinkedIn. Daniel and I are very accessible, and we want to hear what you have to say. So with that, I'm going to close this out. Have a great weekend. We love all of you. Take care.